All right, good morning, traders. Let's do the damn thing. Let me get my music going here. All righty. All right, boom. We're good to go. A little bit of G-Unit this morning. Throwing it back. All right, before we get jumping in, let me share a couple of watch lists with y'all. Let me do that. All right, let me share this bad boy. So I'm just going to paste the Thinkorswim link for the watch list in the chat here. And if you don't have Thinkorswim, I'll just keep it up long enough, and you can take some notes there. So there is the weekly squeezes, and now let me get you there we go. Some good looking daily squeezes here as well. All right, let me share that puppy. All right, there we go. A little watch list for you good people here. All right, let's get jumping in though. Hey, Andres, good morning. Typically, I would say typically no more than 5 open trades. The major thing I think you want to take into consideration or keep in mind is your overall exposure. So, there's nothing wrong with having 5 open positions. If you're taking, a 10% position size on each, well, now you got 50% of your account invested. At that point, 5 positions can be a little bit sketchy. If you're taking 2% position sizes, etc., that's just a major thing you want to keep in mind. Your total heat, so to say. Morning, Calvin. What's up, my friend? Morning, Andrew, Andy. All right, so let's get jumping in. Take a look here at the futures. QQQ is up. We'll round up a bit and say just about 0.5%. And I'm guessing the S&P 500 creeping up towards that all-time high from yesterday. So, we do have daily squeezes here that are firing to the upside. So the daily squeeze here for the S&P 500, this is going to be day 3. So there's certainly the potential we just continue to grind higher for another few days. There's also the potential, just a major thing to keep in mind right now, is we've already made the high probability move, or what I like to call the easy move. In terms of swing trading, I think it's a lot easier. Take your positions in your individual setups when the market is setting up at the 21. You got all that wind at your back, all that momentum. You're taking profits into this push versus taking all kinds of big position sizes up here. So I do think for the month of September, the trend is going to continue to go higher. It doesn't mean that along the way, we're not going to get dips to the 8 EMA, maybe to the 21 EMA. So in terms of just playing the ebbs and flows of the market, so to say, get long at the 21, take the profits on the push, and then you take your foot off gas a little bit. So market looks bullish. We've just reached that point where at least take into consideration the potential for a dip. So by no means necessary do I think you try to short the market here. And I also don't think you have to stop being active. The couple of things I like to do once we're up here at these extensions is A, maybe scale down in position size a little bit, but B, and I think B is most important, I want to give my trades plenty of time. So a trade that we took in the options room yesterday was in Snapchat. And I love the chart here. Great daily squeeze, you got stacked EMAs. So I like the structure here. However, for conversation's sake, and this is just, again, what you want to at least be mindful of, if the market spends the next week pulling back to the 21 EMA, most likely what is Snapchat going to do? Best case scenario is it just chops around for a little bit. So what I don't want to do with the market at these extensions is back myself into a corner where I need the Snapchat move to unfold in like 5 days. I want to be prepared just in the event the market does come in for a bit, that I got plenty of time to see that trade through. So I think that's the only thing you want to do here. Makes your life a little bit easier. And when you do that, take a position in something like a Snapchat yesterday, but you give the trade a good 30 or so days till expiration. Well, if the market just continues to rip higher from here, probably make your money pretty quickly. If the market just goes sideways for the next week and kind of catches its breath, you've given this plenty of time. And if the market does pull back, you've given it plenty of time. So a few things to take into consideration there, my friends. But let's see, we last spoke Monday morning, right? Yeah, we just spoke together on Monday for morning prep. So what have we done since Monday? I'll get you guys up to date. So Monday morning, we took profits on Facebook. So pretty straightforward. A good squeeze, a good entry near the 21. Got the move we were looking for. So we took profits there. We took profits on Tesla. And I want a little more Tesla here. So we're taking profits there. We're looking to take profits on IYR. So, hopefully a little bit of a push there today. We should be golden. And we are still long Apple, which we should get a fill if we can rip through the high there. And we are also long healthcare. We'll talk about in a second. Long healthcare, long real estate, long Apple, and long the industrials. So a couple of closed trades, a couple open positions here. But in terms of where I want to focus right now, you got plenty of good looking squeezes on the watch list. So just in terms of setups that fit the bill, there's no lack of that right now. I do want to have a little bit more of a general focus on a few specific groups though. So obviously technology, I think, is on everybody's radar right here. But when you think of that trade we just took in Facebook, a few of the other trades we just took, we're catching the easy move. We're getting long Facebook pretty much at the same time as the Qs here are at the 21 in their own squeeze, gearing up for their own move. So you're getting long Facebook when you might have that wind at your back. And that ship has kind of sailed here. So at this point on technology, Facebook is certainly too extended. Google's too extended here. Microsoft is too extended. And even Amazon, in a matter of 2 days, runs to about 2.5 ATR. So long story short, technology is your leader right now. My assumption would be it continues to lead into September. Just pick your spots wisely. So I think you wait for a dip to the 8, maybe a dip to the 21, or you wait for a bit of a consolidation, and you wait until something like a 1 hour squeeze sets up here. Maybe we don't rally right away. Maybe we don't pull back to the 8 or the 21. Rather, maybe we just chop. And in that chop, you're going to get a brand new daily squeeze that could, brand new hourly squeeze that could give you the next move higher. So just pick the spots wisely. And even Apple here, it's just not the ideal entry. So wait for a dip there. We took profits on our calls on XLC as well. So with XLC here, basically getting Facebook, Google, and a little bit of Comcast. So a great trend, I think one of the stronger trends in the market. So you wait for a pullback here. So waiting for pullbacks in communications, waiting for pullbacks in technology. And I would also, I'd wait for a dip here in the semiconductors. So the weekly squeeze is a beautiful one, at least I think. Great looking weekly squeeze here. And I think if you can get a dip, you're looking for things like NVIDIA. Come down to the 8 or the 21. Granted, Broadcom has earnings here shortly, but I would take that on a dip to the 8 or the 21. So I love the group. I think the trend for the group continues higher over the next 4 to 5 weeks. Doesn't mean you don't get a few pullbacks first. And I think you want to look to get long on said pullbacks. But one that is setting up here close to the buy zone, a dip to the 21, I think would be ideal for a new entry. But one that is setting up really nice is AMD. So you got the big three here. Trend, a good structure, and a lot of bullish momentum. You got green 10x bars on your monthly, your weekly, your 3-day, your daily, your 4-hour, your 2-hour, your 1 hour, and not on the 30-minute. But for those of you unfamiliar with the 10x bars here, or the 10x labels rather, if it's green, it just means bullish momentum is increasing on that time frame. So you got a stock here in what I think is one of the better trends as far as groups go. In the semiconductors, it's got a daily squeeze setting up at the buy zone, and you got bull momentum from a monthly chart all the way down to an hourly chart. Could roll over and puke, but I like the probabilities here. Again, I think you give this 30 days versus 3 to 5 days. S&P 500 pulls into the 21 EMA. AMD might not explode. SMH comes back to the 21 EMA. AMD is probably not going to explode. So I think you give that trade 30 plus days. And hey, you put the trade on today, conversation's sake, right? You put the trade on today, and by Friday or Monday, it explodes to all-time highs. Well, so be it, right? Just you take your profits. I think you give it time though. So I like those groups: semis, XLC, communications, and technology. But then one group I think you could start to build a few positions in now is healthcare. The big three: KG, Paul Pierce, and Ray Allen. Stacked EMAs, so trend, structure, as we pull back to the 21, you get a daily squeeze here, you're at the buy zone, and you got a bunch of bullish momentum. So one of the better looking trends in the market, my thought process is it continues this month. And now that we're back here at the buy zone, this is where you start to potentially plant a couple of seeds and see if that trend doesn't continue here. So XLV is a good setup. Within the group, his name's like Eli Lilly here. Trend, structure, momentum. There's names like Pfizer. That's kind of pulling back to the buy zone. So I like that group here. And unlike technology or communications, it's not extended up here at +2, +3. So I think you get along this sector here, you look for the next push higher, and then with technology, ideal to get a dip, and then you jump in. So those are a few things I like there. And really just keeping it simple. In terms of Tesla, I love the weekly squeeze. Everything about this is basically perfect. So granted, could be all to do with nothing here, but just in terms of the structure, keeping in mind it's a probabilities game. So sometimes it works, sometimes it doesn't, but just in terms of the structure here, everything is lined up for Tesla to finally fire this weekly squeeze and get back into a bit of a trend here. So into September, October, November, December, I like the odds of that happening. In terms of building a position here, it's tough for me to suggest that at +2 ATR. You got to do that back here. That's where you build that position. So I love Tesla here. I think in the short term, and you could potentially look for a trade here. I think in the short term, and by short term, I mean next 2 to 3 to 5 days, I do think you could test 750 here. It's kind of a big psychological number. You got a lot of open interest up there. So if you're looking for a bit more continuation here, you got a daily squeeze, so that doesn't hurt, obviously. But as we're up here and just a little bit too extended, if you are going to look to try to catch that next $15 into 750, do it with a lower time frame squeeze. Whether it's a weekly chart or a 30-minute, you just get edge. The squeeze gives you a little bit of edge. So what do we have? Not much. And you got a kind of janky 15-minute here. I'm keeping an eye on it. I think you wait for a dip. So this is where things get difficult if you don't have rules. Because it's very easy here to start falling victim to the FOMO. I think you just got to follow those rules. Over the course of your career, you're going to be just so much more well-served by getting long down here. So we'll see if we get the dip there. AMD, I think, looks great, so keep an eye on that one. Wait for your dip in tech names. Wait for your dip in communication names. Wait for your dips in Tesla. But Apple or AMD, I think, is buyable here. Healthcare, I think, is buyable here. Snapchat is buyable. I think SQ, a really solid daily squeeze. I think Honeywell, you got a triple squeeze. Daily, 3-day, and weekly. So just a whole bunch of good stuff there. What else we got on the list? You got Net, very solid. You've got another name in healthcare here, Thermo Fisher. That's pretty bullish, if you ask me. Eli Lilly, another healthcare name. You got Yum. Nice daily squeeze coming into play. So good looking list here. Oracle is clean, but earnings is a little close here. A little close. But yeah, biggest piece of advice is don't try to short the market here, and just continue to get long. Good looking setups, the best trends the market has to offer, but get long in a fashion where, if in fact the market does pull back to the 21, you're not going to get your ass handed to you. So I don't think you want to have 30, 40, 50, 60% of your account invested to the upside right here. Totally normal if we flush to the 21, right? Totally normal. And it's going to happen over and over again. So what you don't want to be is the trader, and quite frankly, this is your typical retail trader. You don't want to be the typical retail trader who can make money when anyone can make money. And let's be real. It's not tough to make money when the market goes higher every day for basically 2 to 3 weeks. What you don't want to be is the trader, right? The guy or the girl who can make money when everyone's making money, but then the inevitable reversion to the 21 completely wipes you out. So if you make $20,000 on that solid push, and then you lose 20,000 or more, it's an endless cycle. So the easy combat against that is just position size appropriately up here. You should have made easy profits on the ride up. Now look at my mastery trades as of late. We did just that. Now, granted, month of August, look at this bastard. What a creep. Crowd. We took a losing trade on Crowd. Ooh, Zoom got spanked. Our exit is looking good over here. We took a losing trade on Crowd, a losing trade on Zoom, losing trade on Peloton, and between 2 trades on IWM break even. Right? So you're going to have a few of those duds within the mix, but when the market setting up here, that's when you're looking to bring home the returns. So you manage the ones that don't work, and the ones that work, they do their job. So we took home profits on Goldman on a nice push. We took home profits on Tractor Supply, on NOW here. We took home profits on Facebook, Tesla. Notice how most of these names moved when the market started moving. Hopefully that all makes sense. That's when you want to make the growth. Now just scale down in position size. Give your swing trades plenty of time. Just make a couple of adjustments so that if we do have a completely normal pullback to the 21, you're not giving back all the profits. It's my biggest piece of advice here. But things are looking pretty solid here into the open. Nice daily squeeze here for the Dow. In the small caps here, I don't know what to make of them. Not much to do there. Not much to do. So on my end today, we'll probably get a fill on Apple if we can break through the high. But we got time here, so it doesn't necessarily have to happen today or this week, though I wouldn't complain. If we can get a little bit more of a push here in IYR, we should be in good shape to take profits there. AMD isn't doing too much here for us yet. I think our put credit spread is at 30-ish% of max profit. Healthcare is a new trade. Nothing to write home about there. And then we've had these in-the-money calls in the industrials. And this is why I like my put credit spreads, right? There's nothing wrong with the structure here. It's one of my favorite daily squeezes. You got a 3-day squeeze, and you got a weekly. I think everything about the industrials is bullish here, but this is a reality of buying calls. We bought those calls over here, Fast forward 3 or so weeks, nothing's happened. So all we're doing is eating a little bit of premium decay, where, with a put credit spread, if you're still out the money, you're getting paid to sit through that crap. So that's the only trade that's been a bit of a nuisance here. But I think our calls are down about 10% or so. So no bloodshed. But that's what I got for you here, my friends. Identify the strongest groups. In my opinion, technology, semiconductors, communication, healthcare. Healthcare is buyable now. The other of the bunch, I think you wait for a pullback. I think you make your life easier doing that. But let me get caught up in the chat here. We got a good 20 plus minutes before the open. Yeah, Zach, those are the golden days, man. Those are the golden days out here in Massachusetts, the big three. Though I don't know, my man Tatum, he might bring us back to the glory days here. Anthony, HCA. Ooh wee. Uh-huh. All right, so I like it a lot. But okay, I remember this one. All right, this is coming up in the scan results. Good to see that it worked. I like it a lot. Ideally, I'm building a position back here near the 21, and I'm getting paid on this push. I would definitely look to get long on the next dip to the 21 EMA. Super bullish, right? Just everything about it. Yeah, literally everything about it. Beautiful uptrend. Yeah, that's where I think you want to build that. But for those of you that are new to trading or just new to the squeeze, these are the kind of charts you want to build like a catalog of. Even if you didn't trade this, you want to print out these kinds of charts and just, on the weekend, keep running through them. Just visually kind of get used to, that's clean, right? That big three, trend, right? So why is trend important? Because the trend is your friend. More often than not, when we go into pullbacks or when we go into consolidations like a squeeze, again, more often than not, it's just going to continue out of that pullback or out of that consolidation in the direction of the overall trend. So that's kind of the first layer of probabilities there, right? We're trying to build layers of probability. So the first layer of probability is your major focus is going long stocks in an uptrend, right? Now we add a little bit more probability here, a little bit more edge by focusing on that moment in time. When we're building up energy, squeezing at the 21 EMA, it's basically your rocket ship on the launching pad, getting ready for takeoff. So that's a whole nother additional layer of edge. We're not just jumping in this stuff randomly, right? We're waiting for a very specific moment in time. And then in terms of momentum, something like an HCA here, again, you don't have to know the details of the 10x bars. Just know if they're green, bullish momentum is increasing. So now you found a stock here in an uptrend, in that high probability moment in time where it's building up energy on the launching pad, and from the top to the bottom, there's just bullish momentum all over the place. Now, is that trade going to work every time? Absolutely not. But if you can take 100 trades in a row and they all kind of look like that, I'm a firm believer you come out on top in a big fashion. For those of you in the mastery, that's what we're doing, right? We're working those numbers. So when we take that trade on crowd, we're taking that every single time. Trend, structure, momentum, every single time. Just the reality is we don't know which ones are going to work and which ones aren't, but you're working those numbers. So you take a swing at crowd, doesn't work. You take a swing at Zoom. Again, it's like I'm taking that entry every single time. Doesn't work. You take it on Piton. Right? You're working the numbers here. You're really damn good at working the numbers. I would argue out of every 100 trades, you're probably going to lose 30 to 40. If you get really damn good at trading, that's probably what it's going to look like. But you just keep swinging at the same pitch. And you hit on Goldman. You hit on Tractor Supply, you hit on XLC, you hit on Facebook, you hit on Tesla, you hit on NOW. You kind of break even on IWM, right? Just working those numbers though. Yeah, HCA, beautiful. I would take it on a dip. I would take it on a dip. Andres, I don't ever trade butterflies. Um, though a lot of folks in the simpler in an options room over here, they do trade butterflies and they trade them really well. So there's definitely something there. Just something I haven't ventured into. I guess my mindset is, here's the way I look at trading. So here's all the different ways, the pool, so to say, of all the different ways you could go about trying to trade for a living. What I've tried to dedicate to is I want to try to become, one of the best in the world at a super freaking small niche, right? My niche is just simply trading put credit spreads on stocks in an uptrend out of a squeeze. And for me, it's like I just want to get as good as humanly possible at that. Because if I can get as good as humanly possible at that, my assumption is I'll probably get pretty wealthy along the way, which ultimately, that is the goal. So again, there's a lot of value to buying in the money calls. There's a lot of traders in the simpler, they make a living doing just that. Then there's guys like a Henry or a John. They're a jack of all trades, so to say. They'll do put spreads, they'll do debit spreads, they'll do butterflies, unbalanced dinosaurs, all kinds of crazy stuff. Just for me, I want to become one of the best in the world at that very one thing, right? That one thing. That's just kind of my mindset. And a huge part of the quote unquote journey, I think, is finding that that one thing. And for a lot of traders in the simpler room, it is butterflies, or at least butterflies does play a huge role. So hopefully that makes sense, man. Hey, good morning, Todd. Thoughts on LKQ? What you got here? Ooh, I like it. Yeah, it is absolutely nothing to dislike here. Other than I wish I could have gotten an entry back here. To me, I'm a huge stickler for that. Because if you could get long back at that 21, you already got profits coming in. Think of our AMD trade from the Mastery. Hasn't even thought of breaking out yet. But because we're taking that position down here close to the 21, we already got, 30, 35% of max profit under our belt just from that little push. So with the focus on these squeezes and looking for a move from the 21 EMA into about 2 to 3 ATR, I'm trying to capitalize on as much of that as possible. So when we start finding things that, albeit look incredibly clean here, what I'm saying though is, what if we only get to 2 ATR? My reward might be half of an average true range move, and my risk in terms of holding on to this until it's no longer a valid setup is all the way down there at -1. So that's when the risk reward gets a little bit thrown off. So I would take that all day long on a dip because everything about it is bullish. What happens to me a lot of times is I miss moves left and right. Like there's just so many things that make beautiful moves that I watch happen and easily could have taken, but I just got to follow that rule. So something like this very well just might not pull back. And it'll be one of, the probably couple hundred moves I'll have missed this year. Jason, I like net here. Let's take a look at net. Yeah, I like that daily squeeze. So, So Andres, here's kind of something I would do, right? Yeah, it's pretty clear. Actually, I'll show you. I'll just show you Snapchat. I'll just show you Snapchat here. But in terms of, I like that. NET looks really clean. I do like NET. I mean, I got a few different put credit spreads here. So let's put together a new one, just for kind of conversation's sake here. All right, actually, let's do this, right? So if I like Snapchat, right, based on the trend, the structure, the momentum, and I think over the next 30 days it's going to be trading higher. If based on the picture that's getting painted here, I'm confident that's the outcome. 4 weeks from now, we're trading higher. I'm way more confident 4 weeks from now, we're not going to be trading lower. So, for conversation's sake, let's just go to Snapchat here. We'll go to October 8th. Right? Again, just conversation's sake. So, let me just play around here real quick. All right, so here's kind of a good example, right? So on something like a snap here, where again, I like the setup. I'm confident 30 days from now, we're going to be trading 2, 3 plus ATR, right? Much higher. So if I'm confident of that, well, then I'm really confident 30 or so days from now, we're not trading under, say, 72. So what I can do here is I'll go in October 8th, the expiration. And what I'm going to do is I'm going to sell a put credit spread where basically I'm going to sell the 72 strike put. And then at the same time, I'm going to buy, say, the 70 strike put is protection. And that's what gives you a written in, that's what gives you a max loss, gives you a defined risk. So I would sell that spread here. Say we sell it for 65 cents. Now you get a 2-to-1 risk reward ratio, right? Where I'm risking $1,300 to make 650, and you make that 650 so long as Snapchat here stays above 72. In a nutshell. So 30 days from now, Snapchat has exploded and it's trading at 85. You're going to make your $700. 30 days from now, Snapchat has really only gone a couple bucks higher. It's up here at 78. You're going to make your $700. Say 30 days from now, Snapchat has just gone nowhere. Still trading here at 74. You're still going to make your $700. Say 30 days from now, Snapchat's even trading a little bit lower. We close above 72 at expiration, you're still going to make your $700. So the major way to look at it is if we buy in the money calls here, we need to move to work, right? There's only one move where you're going to make money on those calls. The stock has to go higher. If you sell that out the money put credit spread, the stock explodes, you make money. Stock slowly grinds higher, you make money. Stock trades sideways, you make money. Even if the stock goes a little bit lower, you can make some money. So, one of our trades in Broadcom, we took home, I think, 80-ish% of our max profit on our put credit spread. And I think we sold the put credit spread somewhere over here. Long story short, the stock went absolutely nowhere. So when we sold the spread, the stock was trading at 483. A month later, it's still trading at 483. But we sold puts down there and our spread at 470. So we basically got paid a nice paycheck because Broadcom didn't go under $470. And if you search on the YouTube channel here, my man, I got a lot of videos on spreads that kind of go into some of the finer details, so to say. Money Yeet, the Keltner channels, I do use them for profit targets. Absolutely. So, again, it takes a little bit of the decision making out of the process, which I'm a huge fan of. So for me, it's the same process every time. I'm looking for the same setups every single trade. I'm looking for the same entries at or close to the 21 EMA every single trade. And I'm looking for the same move every trade. A move into 2 to 3 ATR, into the purple or the red Keltner channel. Every time, right? No questions asked. So IYR here, Here's where we get long. Here's where we get ready to take profits. What I love about that is it's taken out a lot of the decision making. It's like, oh man, this really looks good here. What if it could run up into 110? All those silly conversations we have with ourselves. I like having rules in place. Kind of trading like a robot, so to say. Yeah, that's it, Todd. That's it. Absolutely. Hasham, if I had to pick between Snap and SQ, which one will I pick and why? They, excuse me, they both look really good. And I think we were talking about this in the options room yesterday. Both good-looking daily squeezes, um, both good-looking weekly charts. The difference here is the quality of the lower time frames. So if you look at Snapchat, you have a nice 4-hour squeeze here yesterday. It's got stacked DMAs. It's got a positive histogram. You had, a nice 2-hour squeeze here. So you had some good squeezes and good structure to your 4-hour, your 2-hour, your 1-hour. Where with SQ, granted, a great looking daily chart. I mean, the 4 hours clean here as well. I don't think you can go wrong with either. I think the only thing that led me into Snap yesterday was that 4-hour squeeze looking like it was go time. I like them both, though. Slight differences there. Where Snapchat's trying to fire it. I like them both. I like them both. Looking at the weekly charts, I mean, they're both very similar. They're both on the verge of firing a weekly squeeze, and now they're giving you a daily squeeze on top of your weekly 8. Very, very similar here. It's Snapchat, same thing. Weekly squeeze getting ready to fire, and now you got a daily on top of your 8. So I think the only thing that we were liking yesterday was Snapchat was kind of rearing its head here. It's like, hey, we'll jump into this one. 4-hour squeeze looks like it's trying to get going here, and then we'll keep an eye on SQ. That still looks really good. And I do know our friend Sam, Mr. Shames, did a trade with y'all on SQ, so trying to give a little variety. But I do like Square here. I do. All right, gang, we got a couple minutes left here. Let me keep going through here, getting caught up. YT AAA, I'll see you in there. Brood, how far out of the money do you sell your put spreads? Brood, I keep it nice and simple. I'll go as far out the money as possible, so long as I'm still getting a 2-to-1 risk-reward ratio. That's where I typically like to land. 2-to-1 risk-reward ratio. Every now and then I'll go a little bit further out, maybe a 3-to-1, but for me it's just kind of kept it nice and simple. And how far you can go out really depends on time till expiration. With 5 days till expiration, if you're looking for a 2-to-1 risk-reward ratio, you're probably going at the money. 45 days till expiration, you can start going pretty deep. So that's what I'm looking for, 2-to-1. Andy, I like LEN here. Listen, real estate looks solid right now. It's not the most exciting bunch, but you got trend, structure, momentum. So within this space here, and then there's also XLRE, same thing. But check out AMT. Great daily squeeze. Now, LEN. So I know that's LEN might be more so home builders. That might be more home builder. What's that? ITB. Hey, either way, if it's part of real estate looks good. If it's part of the home builders, ITB, that looks really good as well. So either which way, I like LEN. Very nice daily squeeze. Just keep in mind, earnings is coming up in a couple of weeks here. Jason, correct. Right, you're spot on. So Jason, let me show you. I got a watch list here of a couple 4-hour squeezes. Yeah, just a few of them, but the same rules apply. So, I mean, look at LEN here. If I'm looking to play the 4-hour squeeze, I don't want to do it up here. Right? Same principles apply. I want to build a position in a squeeze out of 21 EMA, and I'm looking for a move into 2 to 3 plus ATR. So, say we gap up this morning and LEN is now trading at 109, 110. I'm not going to take it. If that was the time frame I wanted to trade, it's too extended at that point. But Costco, that's at the 4-hour buy zone, and there's your target. If you're playing the 4-hour, LOW, brand new 4-hour squeeze, but you're correct. Entries at the 21 on that given time frame. And my favorite setups ever, I think we had this in NOW. My favorite setups ever is when from a daily chart down to a 4-hour, a 2-hour, a 1-hour, a 30-minute, a 15-minute, when basically every time frame is squeezing at the 21 EMA. My favorite trades. So the NOW, you had the daily squeeze, right? Trend, structure, momentum. So you had the daily, but look at the 4-hour. Bullish 4-hour squeeze right at the buy zone. Check out the 2. Right at the buy zone. You had the 1-hour. Right at the buy zone. And then the 30, the dirty 30 here. And I'm not trying to get you all too hot and heavy too early here, but I think you had a 15-minute. All right, we can't go far that back. Might be a good thing. But yeah, those are some of my favorites. It's like everything is on top of its launching pad. So then your 15-minute fires long. Boom. Wakes up the 30-minute. Boom. Wakes up the 1-hour. That wakes up the 2-hour. All of a sudden, you got a big squeeze orgy taking place. So there's your analogy for the day. Squeeze orgies. AT, I love y'all too. I love you too. The black arrows is something I'll be able to talk more about within the next few weeks. Basically, what the black arrows is an indicator I'm working on. And some of you took my class. You know a good chunk of it. Man, this sinus infection is kicking my butt. I have a weekly chart checklist, and I have a daily chart checklist. So for me to trade something, regardless of whatever time frame I'm going to trade it on, it has to fit every single one of the criteria from those 2 lists, the weekly and the daily. Now, if you took my class, you have those lists. It has the criteria of those lists along with a few other goodies to basically tell me, hey, it doesn't get any better than this. Everything from a weekly chart down to the ground is in that high probability moment in time where trend, structure, momentum is just turned up to the max. Granted, it's not going to work every trade, obviously, but it's like the cleanest of the clean, at least in my book. So still working on that, but really excited to get that out there into the universe. Oof, Andrew, Amazon 3,500. Andrew, where's Max Payne? I'll look real quick in case you don't know, because I'm curious as well. Let's see. Now, Amazon doesn't have to respect Max Payne. It didn't last week. Max Payne is at 33.80. All right, yeah, that ain't gonna happen. Oof. It's gonna be close. Andrew, here would be my only advice. Take into consideration whatever the max profit is on that trade. And then I guess just kind of, make your decision based on, where you at in relation to that max profit. So for conversation's sake, if max profit is $1,000 and you're up $850 right now, my mindset would be, I'm not trying to play games here for an extra $150. So that's kind of how I would look at it. right, but we just opened up here. I won't kick y'all out. We can party here for a bit. But let's take a look. Let's take a look in a book here. Patience up here. Just be patient. Totally normal, totally healthy, like, totally understandable if the market comes in a little bit here. Don't let that destroy you. But all flat here. Oh, the Qs look pretty solid. All right, let's see, Apple here. All right, Apple's looking good out the gate. Let's see, AMD here today. Dropping a bit. Tesla kind of flat. Real estate. All right, so I got a few things to go manage here in the mastery. So let me go and do that. So my bad not being able to get to everyone's questions. What's today, Wednesday? I'll tell you what, usually we just do Monday, Wednesday, and then Chandler does Friday. I'll jump back on tomorrow morning. We'll do another prep. So same time, same channel. And if I didn't get to your question today, I will get to that tomorrow afternoon, or tomorrow morning rather, all right? So I appreciate your time. As always, have a good afternoon, and I will talk with you all soon.